No music tonight? Yeah, no. We are live. Good. Yeah, I didn't cue no music up. No.
You can sing for us.
You're just cutting up tonight. That's what you are. Left turn Lolos, huh? Left Lolos, left turn.
Oops. Sing some Neo. Sing some Neo.
See? Now Fuego says you can sing in there. She's not left turn Fuego.
No, she's just 5'5". Period. You guys.
What can I say?
Should we do? Talina, you are on the wrong side of my screen. Where are you? It says good evening. I see that part, but where are you? Should we do? Anywho, did you guys hear that Roberta Flack passed away?
Yes.
Yes.
I didn't hear that. Well, I read that.
Hi, T. Don't roll your neck at me. Don't roll your neck.
I'm right here waiting on you to let me in.
My apologies. I'm like,
you said it with a little. You said it with a little spike.
Hey,
hi, T.
T. Where are you? Should we do?
Hi, Ashley.
Hi.
JP. Okay, he's back. Welcome back, JP. Oh, he done moved back in the apartment.
He said he got that rent this month.
He got the rent.
I got that rent money.
Should we do? All right. Let me see. 1, 2, 3, 6, 7, 8. We'll have room for Snoopy Cliff Mello, and we'll have room for Miss Day. Should she make it? If she don't, oh well. Anywho, it is the 8 o'clock hour, you guys. Welcome to Gentlemen After Dark, a place where grown folks can talk without judgment. Tonight's episode of Gentlemen After Dark, as always, brought to you by, I should have had it already queued up, Flavor Flames Candles. It is my Memphis crush, as we always play around and say, my Memphis crush, Tamara, is in the building. I think. I ain't even checked the screen to see if she's here yet. Nope. Oh, yes, she is. She is. She says, hey, people. Flavor Flames Candles, man, if you guys want some of these great scented candles, you guys got to hit up Tamara. I'll make sure that you get the link to her website. Great. I want to say flavors, but it ain't really flavors. You don't want to eat them. Great scents, SCENTS, for you to enhance your homes with, your bedrooms, that fresh, or your living room, or your locker room, or something. Flavor Flames. Tamara, thank you for always supporting. We appreciate you. I'm going to go down the list real quick, do a quick little introduction, all the way from Pittsburgh, Pennsylvania, specifically Homewood. It is my BF. Nadine's in the building. Thank you for being here. QP is in the building. Vincent, he said, JP, you got that Diddy oil. You got that Diddy oil, huh? Here we go. Here we go. Tamara's in the building.
Yes, sir.
Busy's in the building. P-Rock, what up with you?
Hey, Busy.
Hi, Busy.
Should we do? Hi, Busy. And last but not least, they say save the best for last. True.
What up, True?
One of my proud sponsors of this season of Gentlemen After Dark. Continued thanks for your support of the channel. I do appreciate you.
Thank
for those
you.
of us who ain't found a way to support, man, share this with a friend. Without further ado, you guys, I'm going to go ahead and introduce my panel. We got nothing but the grown folks up in here. We missing a few. She ain't here, so I'm going to go ahead and make her first. She's not here tonight. Today is her birthday, her born day. It is Miss Day's birthday, y'all. She's getting older. We was just talking about older. But she's not going to be here probably 9 times out of 10. She's going out to celebrate her birthday. So let's just acknowledge her for her birthday. Give her some love. Send her a message, something, and acknowledge today is her birthday. Actually, today. So,
Happy birthday!
Right?
She's special. She shares it with my mommy. Happy birthday, sis.
Save us cake.
Save us some cake. Cake. Anywho, let me go ahead. I'm gonna start across the top. Ooh, this is gonna be a challenge, but I'm gonna do it. She is here from the south side of Arizona. It's our very own Fire Fuego. Thank you
Hey
for being
everybody.
here. Yeah. He is here. I see you. Last week he definitely turned left. A whole bunch of lefts. We was 3 real motion left turns for real last. It is our left turn brother himself. Doughboy's in the building. Shoot. I don't know. She's been going left today, so I don't know. She might be left turn. Lolo's left turn. This Auntie Lolo in the building, y'all. Thank you for being here, ma'am. Hello. Let's see here. She rolled her, what they say, roll your eyes and stomp your feet. She rolled her neck at me because she was like, I'm here. It's our very own Miss T is in the building, y'all.
Hey, y'all.
Hashtag your mouth is trash.
Everybody stop.
God, I'm never gonna live that down.
Here we go. He is here. He in the studio for real. It's our very own. He just said it. Hashtag your mouth is trash.
Trash.
The building. Love it.
Oh man,
He is the CEO of ChristianDingaling.org. It's our very own Mr. Devin.
how y'all doing?
How y'all doing?
Here we go with the foolishness.
Last but not least, she is our special in-studio guest. Well, she ain't in the studio, but she in the studio. Our very own benefits counselor, Miss Ashley Richardson. Hello, Ashley.
Hi, everybody.
Hi.
Hi Ashley.
Right. And of course, I'm your host, Onyx. Your boy. Well, something boy. Tonight's episode of Gentlemen After Dark, Insured. Are you? I was going to play around with this a little bit, but I'm not going to do that. We're going to jump right into this because this is one of them grown folk conversations that we said that we were going to have, these grown dialogues without, what's the word, cutting the fat off. We're going straight in. We giving us the hard truths, the hard facts that we need to know. So let's go ahead and get the party started with a couple of questions that I've already come up with. Well, actually, let me not even go to the questions. Let me take it back to Ashley. Sorry, we're going to do this. Actually, if you could just give us a little bit of your history without giving us too much of your history. Let us know who you are and what you do so we can see how you play a part. I don't know what that noise is. It's killing my ears. How you could play a part in what we got going on. Help us out.
Hello, everybody. My name is Ashley Richardson. I am a licensed insurance agent here in California, but I also hold about, I think, maybe like 28 other state licenses. And so I am just here to, give information about insurance. I'm not representing any company, just information.
We appreciate you. I appreciate you for sharing your time with us to be here to help educate some of us. So I'm gonna lead us off, of course, with some questions that will make us think, things to make you go, We're gonna start off with this first question, which is a doozy by itself. Anybody? What's the average cost of a basic funeral? A basic funeral. What's the average cost? And please take a shot in the dark if you want to. I don't mind. And I'm drinking chocolate milk.
15 to 20K.
15 to 20K.
10,000.
I was gonna say between 7,000 and 10,000.
10,000.
Depending on where you at. So
I was gonna say 20.
But if you're being cremated, it's 6. 5 to 6.
Okay. 5 to
Probably does
6.
depend on your state as well.
20,000 is the rough estimate. And in usual cases with this, let's just take this high number of 20,000. That's just the basic funeral, right? Who has 20,000 just laying around?
Devin?
That was a rhetorical question, not who, for real. don't
Let me hold some
leave it on
stats.
me, Ricky Bobby.
That part. We don't just have racks of money just laying around. I mean, some of us are blessed enough to have that. Yeah, it's funny, but I learned this from a friend of mine. I'm just trying to be a thousandaire. That's it. What's a thousandaire? Can I just at least at any given time have $1,000 in the bank? And I don't mean just on payday and maybe 2 days after that, or I don't mean on my income tax didn't hit and it's gonna sit for a couple of days until you go and blow it. I mean, on any given day, can I just have $1,000 in the bank? Because most of us is living paycheck to paycheck. Most of us are employed, but people like Ashley come to our jobs. Guess what? We run from her. We don't want to talk to her. And I'm gonna put a pin in it real quick. Good evening, Miss Day. I know you ain't here, but for a hot minute, thank you for being here. We already
Hi,
acknowledged
hello.
Happy
Hello, hello,
birthday.
Happy
hello.
Birthday.
Oh,
birthday.
Happy
thank
birthday.
you. I'm sorry, I'm getting ready to get out. Oh, I love it.
we do. Happy birthday. Sure.
Thank you. I'm getting ready to head out in a little while. That's
Okay.
what.
No
But
worries.
I appreciate you guys. Thank you so much.
We'll excuse your tardiness tonight.
Oh my gosh, I was running so late. So
Mm.
late.
So with that
How's
being the
everybody?
case, we good. We on this conversation. How much is a basic funeral cost? We're gonna run with the $20,000. Miss Ashley, that's here, Ashley Richardson. She is a reputable benefits counselor for insurance. Reputable,
Hi,
very
Ashley.
reputable. I can't
Hi.
name her company
Welcome.
and all that kind of stuff. But most of us, when Ashley comes to town, we run. We run because we don't want to pay the money. They already eating us up with the taxes and FICA, whoever, whatever that is, right? Some of us pay union dues. And then here comes Miss Life Insurance or Miss Workers' Comp Insurance or whatever insurances that are out there. Here she comes. She wants the money. Tonight, let's explore this, you guys, together, because we all have been faced with it. At $20,000, sooner or later, it's going to become your time to lay down forever. Who's going to pay for your entrance into that coffin or that box for cremation, et cetera, et cetera? Who's going to pay for that? Yeah. Quiet silence. It won't be you, that's for sure, right? So let's start with this. We all need it. We all need some life insurance. Would you agree?
Absolutely.
I agree.
You better have it.
And hopefully we all have life insurance. If you don't have none,
Do not.
huh?
They do not.
If you don't have none, you need to get you some life insurance. And maybe Ashley can expand on why is it important to get some life insurance?
Well, for the obvious, death is the one thing that we are all guaranteed to experience. We are all going to die. That's just the reality of life. We plan for everything else in the world. We might plan, for a marriage and a wedding that might not last. We plan for vacations. We plan, baby showers, birthday parties, all of these other major life events that are typically fleeting, but we don't plan for death. And that's the one thing that's inevitable that we are all going to experience. And everybody who said $20,000 hit the money on the head. A basic funeral is $20,000. And for anybody who has had the experience of planning a funeral, you know that the funeral homes want their money up front. There are no payment plans. There are no, layaways, or there's no billing system. You are going to pay for that funeral in full before that funeral happens. But another interesting thing to note is that the cost of funerals actually, all of these things inflate with the rest of the economy. So the same way that the cost of eggs and milk and gas gradually gets more expensive, so will the cost of a funeral. So right now we're at 20,000. In about 10 to 15 years, the estimate is 30. And 10 to 15 is really not far off.
Now, Ashley, why is it that much? Because I read that a real actual funeral for the cost is between 5 and 8,000. So when did it start getting up to 20,000?
So the best answer that I can give you, when I first got into the insurance industry, I used to sit in on these like will preparation trainings, and this gentleman who has been in insurance for like 30, 40 years used to run them. And one thing that he would always stress that I would never forgot was that a funeral is the biggest life event that a family will have outside of a wedding, a graduation, the birth of a child, etc. Right? And when you go into a funeral home to plan a funeral, you are essentially working with a party planner, an event planner, right? And their job is to plan the biggest, most grand homegoing service that they possibly can and eat up as much as your money as they possibly can.
Yeah, that's what I heard.
Yes. And so that is why the cost keeps getting higher and higher. And we typically tend to equate money with love. So the grander the show, the more that this person is loved.
Interesting.
So remember that you're dealing with party planners, event planners. So when you are going into a funeral home to plan a funeral, you never really want to tell them how much money you're dealing with. You don't want to tell them if there's a life insurance policy. You don't want to tell them how much insurance you have.
Yeah, that's what I heard too.
You plan the service that you want and within the price range that you want. Because if you walk in the door and you say, oh, we have a $50,000 policy or a $75,000 policy, they are going to find a way to spend as much of that policy as possible, as they possibly can, right? And you have to think about just all of the, it's like a line item, right? So you are paying for the storage of a body, the transportation, the embalming, the caskets are not cheap. You are paying for the program, right? The flowers. Even people say, oh, well, I have my plot already. What they don't realize is, yes, you paid for a hole in the ground, but now you have to pay for the opening and closing of that hole as well. You have to pay for the crypt that the body, the casket has to go down into. Then a headstone. Like, how often do you see, well, I shouldn't say how often, how many of you might know somebody who has a family member who is buried without a headstone? I've known people where a headstone gets placed many years later because the family didn't have the money. So it's like a lot of layered expenses.
Now, can I ask you this? Like, my family, like, well, I have, my policy is 50,000. Now, if they only use like 20,000 of that, do the 30,000 go to the family, or what happens with the excess money?
That's a good question. So when you're covered by an insurance company, they're actually going to issue all of that money up front. You don't owe any accounting to that company of how that money was spent. Okay. And different companies might operate slightly differently in that some have programs where, let's say you just gave the example of a $50,000 policy. Some have programs where they will cut a funeral home a $20,000 check up front to cover funeral expenses without a death certificate. Because remember, when a person dies, in order to get an insurance payout, you need the death certificate. And so there can be delays in obtaining that. And I know that was a huge thing, particularly during COVID. People couldn't get death certificates in a timely manner. So it depends on the insurance company, but the short, simple answer to your question is that yes, that remainder will go to your family. You don't owe the insurance company any type of receipts or proof of how the money was spent.
Thank you.
Something that I did learn, those, well, the new thing now for the cemeteries is the, what do you call them, crypts? That's the,
and the wall, the vault, like the vault.
Yeah.
Mausoleum.
So just the nameplate, the nameplate of the deceased is almost $4,000. Just for a little plaque that says Onyx,
That's crazy.
Gentleman After Dark.
That's nuts.
He was my friend, but I loved him. 1968 to $4,000 for that. Like, that's a lot of
And
money.
don't forget the Shooby-Doo. Gotta put Shooby-Doo on there.
The question I would have for that is, do you have to use their plate? Because it's people that laser print stuff all day long. So why not go to somebody like that and get your own plate made?
Well, if it's like headstones, then you can use who you want.
But that's what I'm asking. Even for a nameplate, wouldn't that you don't have to pay those exorbitant prices? I wouldn't think.
I don't know the answer to that because I don't work on that end of it. But a lot of times, these funeral homes or cemeteries, they have vendors, and some of them may require you to purchase whatever from there.
Where's that echo coming from?
Real fast. So is anybody listening to the show while they're on the show? Because if your TV is on in the background, we can hear it. It's just taking off. Should we do? Is it him or is it him? Is it her or is it? All right, here we go. Let's keep it going. All right. So Melo's question was, can we use somebody else?
I don't know. But not so fun fact, those plates and like headstone name plates, they're made out of copper. So they've actually become the target of copper thieves in more recent years. So the same way they're stealing the copper wires out of the street lights, they're in cemeteries stealing these things. And even like the little,
The bases.
the flower, yes.
Yeah, the bases. They done that to my family members. Crazy.
That's crazy.
Yeah.
Okay. So I'm going to take us back, reel us back in over here to this first question. Nope, not that one. This one. Ashley, how much life insurance does a person need?
It really depends on what you are trying to accomplish with life insurance. So at the very least, you know that you need 20,000 because we're all going to die, right? And uh if you are sitting with an insurance professional planning for, signing up for insurance, you should actually add about a $10,000 inflation cushion to that. So you really need 30, right? Because we don't know when we're going to die. But if you are somebody who has young children, if you are somebody who has a spouse for whom your lost income is going to create a financial burden, if you are someone who has a mortgage and you want the children to be able to keep that home or the spouse to be able to keep that home, and that's impossible without your income, you need to plan to protect all of those things. And that is not including legacy money. So if you want to leave behind legacy money for children or grandchildren, you are looking at significantly more. Now, obviously, this is not cheap, but I always tell people that it's better to, let's just say, because one interesting thing about insurance is it does the opposite of what your auto insurance does. So your auto insurance gets cheaper as you get older. Life insurance gets more expensive as you get older, right? So the cost of a $25,000 policy for a 50 or 60-year-old is going to be like an old school car note. Like it could be anywhere between $200 and $300 a month versus that same policy for a 20-year-old, you're looking at maybe like $50 a month, right? If they're healthy, or it could be less than that. So if you are a person who has waited and you're older in life looking to secure insurance and maybe you can't afford a $25,000 or $30,000 policy, I always tell people it's better to have something than nothing. Because if your family is in a position where they have to make up the gap, a $5,000 gap, a $10,000 gap is easier to bridge than a full $20,000 or $30,000. And then somebody just said term insurance. Oh, look, this is your show. I'm sorry.
No, read it. Or you want me to read it? It says term insurance, Michelle, who that? Saint Squad LA, thank you for being in the building. Term insurance plus Roth IRA is the way to go, and leave your family with peace, and then they can mourn you without stressing about the bills.
They're gonna fight over that money first.
It might be a discussion about that money. But if I could say something, about that, the reason why I think that happens a lot is because these conversations don't happen until somebody passes away, and now everybody has to put their input on how much we're gonna spend of this, how much is it, how much we getting, and then it's like now it's turmoil. But if those families get together, had those conversations before that happens, now you can just focus on healing.
But not only that, like you said, with that conversation, we don't put together a trust, or we don't put together a will and testament to make it to where what's going where and how it's divided between the siblings.
And
even that's contested.
Even more,
Because when you're in sound mind, people act one way, but when it actually happens, oh, I was mama's favorite. She didn't mean that. In those conversations, I've seen it in real time.
Yeah,
Like,
it happens.
no, I don't think she liked you like that, but okay.
They're hard conversations to have, but they're needed.
Yeah, definitely.
Even more so about the money, just the person's wishes of how they want to be buried.
Absolutely. Correct.
What they want done during their service is very important to pre-plan.
Absolutely.
He's my friend, and I love them. That's all I know. Don't come up here asking me no questions.
I'm not messing with you.
I
Not
don't know
today.
who them other ladies are.
Everybody get 2
I ain't never
minutes.
seen them.
You get 2 minutes.
Don't
That's all
come back in
everybody
those
get.
minutes.
You know what?
My dad, both my parents are still alive. My dad um, has written everything out specifically to the letter, um, emailed each kid. Everything's going to all of us split evenly. We all know, my brother's getting his old raggedy truck that he wants to fix up. None of us girls care. But it's all written out. And it's a sad time in your life to lose someone that you love. Like someone said earlier, the worst thing is to be fighting over or not having the money that's necessary to, see to their last wishes. So my dad, he's taken all of that, which we're all following. Well, I hope we're all following suit, taking it out of our hands and just saying, this is what is happening. This is where the security box is. This is we all know, and we know what he wants, and it's all written down. And even though it was sad when we first started having those conversations, I think it's the best thing he could do for us.
Right.
My grandmother did the same thing all the way down to having her program already written out. And it is
Luther Vandross, baby.
the burden is it's not even a burden, but it's left to the parent, right? So you don't become responsible for your siblings' feelings.
Right.
Or feel like you're the bad guy. This is what mom decided, this is what dad decided, or whatever. But you'll be surprised. A lot of parents are actually very uncomfortable doing that. I sit with people all the time when it's time to select a beneficiary. They'll say, oh, well, I need to do it this way, or I need to do it this way because this person will be mad or whatever. And the reality is that what I will sometimes tell people is who is the most responsible, who is the most equitable, the most fair that is going to
honor your
do
wishes.
what needs to be done first, and then also do right by whatever siblings or whoever else is left. Because let's be honest, all of us are not good at everything. In every family, everybody plays a role. There's going to always usually one that is the most responsible, and then everybody else in between. I personally wouldn't leave it. I don't have children, but I personally wouldn't leave anything to the least responsible person.
Right.
And so those are things that you have to decide. And then also, speaking of beneficiaries, because I saw things about trusts and things coming up, it's also very important to note you absolutely need to identify a beneficiary on a life insurance form. So if you die and you have debt, your debt actually does not disappear. Legally, no one is completely responsible for it unless you are married, and then your spouse becomes responsible for it. But your children cannot be responsible for your debt when you die. However, your creditors can come after life insurance if it defaults into your estate because there was not a named beneficiary. Now, a lot of people mistakenly think that estates are only for wealthy people, but the reality is that each and every one of us has an estate. What's in it is going to vary. So if you die with a life insurance policy without a valid beneficiary, that money defaults into your estate, at which point your creditors or whoever you died owing money to can come after that. And that's not a situation that you want. As long as there is a named beneficiary, they can't touch that money. And you also want to have a contingent beneficiary, right? Because if your primary beneficiary has already deceased and you haven't updated it and there's no contingent beneficiary, then once again, you're looking at the money falling into the estate. Legally, minors cannot engage in a contract, so they cannot inherit insurance proceeds. And so what typically happens in those situations is that an insurance company will hold the money until they turn 18, but they assess a fee for having done so.
Wow.
So that's also important to note. You don't want to leave your minor children as primary beneficiaries. You can leave them as contingent and then update them when they turn 18. But if you die while your child is a minor and they're the primary beneficiary, that money is held and there's not much that can be done.
This
Now,
person be back, whatever. what was that?
Right. Who was that?
What
Okay.
happens when people leave dogs and pets their money? Have you had that?
I haven't had it, but what is going to happen is what Lolo mentioned. It's going to be a fight over the custody of the dog because
both dogs gonna be fighting.
zany wealthy people do stuff like that, and I think it's to spite their relatives or whatever. Like, oh, I'm going to leave all this $1 million to my dog. Now it's a fight over the. I couldn't stand that dog my whole life. Now I want that dog, right?
Right.
Because the dog comes with the money.
So if I can leave a tip of the day for right now, first tip of the day, for us with children, kids, us adults with kids, multiple, because that's what kids is, multiple, it's in your best interest to make sure that you document these conversations with the most responsible. And honestly, you can have it with the not most responsible so that they know where they stand in advance. Don't put them in a situation where they got to fight their brother or their sister because they thought that the money was coming here. I mean, that goes even in my case, just to be transparent. My mom, many years ago, it's like, okay, Sean, that's my middle name. When I die, you're going to make sure that everybody gets the amount of money that needs to be had. Well, here we are all these years later. Mama's still alive, thank goodness. But we all are older. Some of my siblings I don't even deal with. And I already know what's going to happen. Here you go, man. Mama said give you $1.50. Here you go. Oh, no, she didn't. I'm supposed to get the and that's what we did. So please do yourself a justice and take care of your kids in advance by way of a written document. Michelle wrote down here earlier about a notary. I was going to say rotary. A notary. Get those documents notarized so that they stand firm, whether it's in the court of law or whatever it be.
Can I add something really quick to that?
Sure.
In not just having the conversations and getting your documents together, make sure your documents are in a place where they can be accessed. A lot of us from certain generations, we learn to lock up important documents, but that is the absolute wrong approach. We learned from parents or grandparents, you know, to put stuff in safes or safe deposit boxes. So many people die and nobody has a key or a combination to the safe. Nobody knows the safety deposit box exists. Your beneficiary needs to know that these insurance documents, that you have insurance and with what companies, because companies, we don't know that you died. They are never going to come looking for you or looking for your family to get you your money. Your family has to come to the insurance company. They can't do that if they don't know that these policies exist. So they need to be in an accessible place, at least, you know, a primary and a contingent person knows exactly where to go when that time comes.
I like that. I mean, I only have one child, so that's my beneficiary. She knows the combo to the safe, but like you said, you never know. Hell, by that time the battery might have went out on the safe, and you can't get in it unless you got the key. So I got to make sure she got a key, the backup plan. But I like the fact that you said you have to provide them with all the information of who has insurance on you. Because I got this money over here. You think I'm going to look for you to tell you that I got the money? No. So there's a lot of things that we could be doing, you guys, as parents, or just as an adult living, and you want to leave things behind. It could be, don't even have to be your kids. It could be your nieces and your nephews, whoever that beneficiary is. That's who's going to receive those benefits. So you got to make sure that you put them in a place that they will be able to get those things. Ashley provided us, you guys, with this.
Lolo had her hand up.
Go ahead.
This happened in my family, and when sometimes even when best intentions laid out, as a cousin, I'm sorry, and he was he knew his role, he knew what he was supposed to do, things were written down, but what he did not know was I know I'm messed up the verbiage, but legally he was supposed to wait until he gave this money to whomever, and he didn't know that. And so he went on to kind of get them out of his hair, I guess, and went on and just paid them basically from himself. And it caused more of, oh my God, it was a nightmare. So, we don't all know all the legalities in and out, but I just say that to say, do everything in your power to really make sure that everything is lined up the way it should be so that those issues don't happen.
And it's, easier said than done. I get it. But now's the time that we can get it done, because life expectancy is shorter and very unexpected. Very unexpected. Ashley, this, you guys. Sorry, somebody was going to say something.
That's okay. I'll go after. No worries.
Go ahead. Speak your piece. Speak your piece.
No. Go. I'll wait till you're done with that chart.
Okay. So Ashley provided us with this nice little chart. Term life versus whole life. What's the difference? This is the breakdown. And maybe, Ashley, if you want to expand on it, please, by all means.
Really quickly, so you can consider term life for insurance for if you die. So it says ideal coverage for high demand years. We have to plan our insurance as if we die tomorrow, right? So insurance for if you die, meaning you pass away prematurely while you're still in your working years and your income is still important to a spouse, to dependent children. So term life is the one where you can usually get really high levels of coverage for a little bit of money. There is no cash value. An insurance company offer a set number of years. So you can see plan options 10, 15, 20, or 30 years. Those years correspond to your age, right? So if you are under 50, you are still eligible for a 30-year plan. Once you hit 50 with most companies, you are eligible for a 20-year plan. And what that means is that the price is guaranteed for 20 years or 30 years. Okay. And so if you have a $100,000 30-year term and you pay $25 a month for it, that $25 is going to be guaranteed for 30 years. In year 31 of the policy, the price is going to increase based off of you now being 30 years older. The truth is most people cancel term policies when their 20 or 30-year term expires because they become unaffordable for most people, okay? And then there's no cash value in a term policy. Whole life insurance is, you can consider that insurance for when you die. That's going to be a fixed face value at a fixed premium for the rest of your life. It is much more expensive, but you are not going to have any surprises. And you also have a cash value pot that is building. There is no right or wrong answer to selecting your coverage, and you can actually have a mixed bag of nuts, right? But if you are someone who has young children, or again, a mortgage that needs to be protected, you are likely very much so looking at term life. But you can do a combination of two. So for example, I have about maybe like, I think about 400,000 in term coverage and 75 in whole life. When my term policies get to the place of me not wanting to pay for them anymore, I feel like they're too expensive, I'm just going to let them go, because there won't be any money left for anyone at that point. However, I know that I have my $75,000 in whole life, and my family won't be scrambling to bury me. So that's the idea behind like whole and term.
Thank you for that. Appreciate you. T.
My internet is really sucky, but one of the things I was going to mention, because I know we talked a little bit about wills, we also have to remember that wills are great. I mean, people like to create wills thinking that that's going to save them. Wills are okay, and you can legally record them. However, you will still need to go through a probate if all you have is a will. So being sure that you have a trust to accompany that will is great. Wills do become public when you go through a probate, and the trust does not. And in addition to that, for those people who think, well, I don't really have a large estate, as Ashley was mentioning, when you receive, who has an insurance policy, some people have millions of dollars worth of insurance, immediately you can come into quite a bit of money. So you have to be very clear. So what Lola was mentioning, and I'm sure Ashley, if she's alluded to it too, you have to make sure that you have all your ducks in a row, because there are estate taxes. There's a lot of other things that come along with this. You have to be very clear about what that looks like. And again, we know it's a difficult conversation, but it's one that has to be had. And those of us that are in this insurance world, we try to educate people as much as possible. But it's unfortunate, because people, the first thing they will get rid of is the insurance, but they'll go and take care of and pay for everything else. I don't understand that. I just like you, Ashley, we look at people and go, come on, guys, we have to do better. We have to make sure we set our families up. We talk about this lovely term of generational wealth, but we don't know how to get to it. Insurance is a great proponent for that, assuming you do the right things. You set them up appropriately. So as she said, there's the burial. Yep. There's cash value. There's legacy. There's a lot of things that come along with it. So, this is a very important conversation, but we also have to be mindful of the fact that there are family members that will continue to press you, and they will contest things. So having a will is cool. It's like the wonderful love note to let people know how you would like for your assets to be split up, but making sure that you have a trust to back that up is really critical as well. So if you haven't had that opportunity to even just go and speak to a trust attorney, get just some basic information. It doesn't have to cost you anything. It would be in your best interest to do so.
And also remember, to add to your point, a will is actually only as good as the person that you have designated to enforce it, right? So you want to make sure that this person is going to stand 10 toes down with you on your final wishes, because you can have a will and I could go do whatever I want to go do because you're dead, and who's going to stop me? Also adding to your generational wealth comment, a friend of mine told me this a handful of years ago, and I was like, wow, that's really profound. As people of color, we are the only people who start over every generation, not only because when we die, we're typically not leaving anything behind for the last generation, but we are leaving the debt of burial. So it's a constant restart, and it's very cyclical. White people have been playing this insurance game for many, many years. This is how they create and build generational wealth. There are a lot of widows out there who it was a life insurance policy that sustained them and the kids and kept them in the house. More people actually lose their homes to premature death and not being able to afford their mortgage than people lose them to fires. So that's just something to kind of think about. And then also want to add with the whole life policies, set your kids up with whole life policies when they are young. Okay. I don't have any kids, but I have godchildren. That's what I do for them. My goddaughter has a $50,000 whole life policy that I put on her before she was not even one. I pay $14.87 a month for her $50,000 policy, and it will be completely paid up when she's 21. That means I owe no more premiums on it, right? So the reality is that like insurance for kids makes a lot of people uncomfortable. You're not planning for your child to die, but the reality is that children, one, they do die, but you are setting them up for the future. If you can lock them in at a price that low versus they're now 40, 50, and maybe with health issues, and the insurance is significantly more expensive, you want to lock the kids in. And I tell people, when they get their first job, give that to them as their first bill, because we all find a way to pay for the things that we want. So they will always figure out how to pay for the cell phone or how to get the new sneakers or whatever. Give them the insurance bill so that when they do get to the stage in life where they have real financial responsibilities, they've already learned the importance of insurance and how to work that into a budget.
Like that. I never
Yes, ma'am.
thought about it like that. As soon as you get of age, oh yeah, you got the gas bill, you paying the cable bill. Give them the insurance. That's
correct. Mm-hmm.
I did it.
And you can get insurance on them babies 14 days after they're born. 14 days. So you will never be in better health at that point. So,
that's
to
true.
Ashley's point,
here's the other thing though. 14 days of age for a standalone policy, right? But if you have children and you have your own policy with a child rider, the child is automatically covered at birth. They don't have to wait 14 days. Now that's important because children are also born unhealthy, right?
That they are.
So where you have a child who's automatically covered at birth, what if that child turned out to have some type of health condition that then made them uninsurable? You can't get a policy at 14 days or at any other age.
True. Yep.
So if you have children, add a child rider because future children are automatically covered.
Yep.
Okay. I think I have 2 more questions. I think we got time for it. I think we did.
Okay.
How can you get adequate coverage with the least amount of premium possible? Adequate coverage. I guess that's the true key. How can we get adequate coverage?
That's kind of a trick question. So adequate is going to be like, what are your needs, right? But also your affordability, because insurance is a long-term commitment. If it is taking a food off of your plate, then your premium is a burden, right? So you want to fall in that sweet spot where it's like, you know what, this is enough to at least cremate me. This is enough to at least get me in the ground, and I can afford the premium, right? Without feeling overwhelmed, without feeling burdened. But like I said, insurance prices increase. So the older you get, the more expensive it's going to become. And a lot of people, unfortunately, they will wait until they retire to get insurance because they say, oh, well, I have insurance through my job. And that is true. You have employer sponsored insurance. Most people, it caps at $50,000 because that's the point. That's the threshold where taxes don't have to be paid on it, right? But your job owns that coverage. So when you separate for whatever reason, you lose that, right? So let's say you work until 55, 60, 65, 70, and you've had this employer sponsored insurance all of this time. It's great. You had it because you didn't pay for it, but you're still alive, and now you're retired, and now you're 70 years old looking for insurance. That's a really tough spot to be in. You want to get it when you're younger. And like TT said, we only have our health for this day and this moment, because the minute something happens where your health changes, you don't completely become insurable. There are companies that will give you what is called guaranteed issue, but they charge you more, and you have to outlive that policy by 2 years before they will pay out. Right? If you pass away within the first 2 years of that policy, the policy will not pay. They will refund your premiums with a little bit of interest. But yeah.
That's it. Wow. There's a lot to learn, honestly. And I appreciate you again.
I know we're on a time crunch, but Lolo and JP had the questions that they posed before we started. I wanted, because I told them we'll table those. I wanted to address those.
Lolo, JP, and Doughboy too. You got a good one too. So let's go. Let's start. I think it was JP's question first, if he remembers what it was.
Yeah, it was with Aflac, in regards to Aflac and changing. Should I keep Aflac or should I change
Another
Aflac?
company.
Call me about your Aflac. I got you, JP.
All right.
So I never recommend people to change insurance, because if you are insured with one company and then you cancel them to go pick up insurance with another company, you are the person who is lost. The insurance company has your premiums. You no longer have coverage. But also remember, I keep talking about the age thing. So when you enroll in insurance, you are locking into that price. So the price that you got for that insurance that day that you enrolled is not going to be the price tomorrow, right? Because your birthday every year is an automatic trigger for a rate increase. And so you should never, I don't recommend people switching. And I tell people, don't ever allow insurance representative to come talk you into, oh, I could put you in this and I can put you in that, because as humans, we just look at the dollar sign, but insurance is not apples to apples. It is apples and oranges, and it's in the details.
And bananas.
Correct. The details are going to be different from insurance company to insurance company. So people are often insurance rep who comes and tells you, hey, come over here and do this business with me. They're looking out for themselves because they are making a commission off of you.
Correct.
But you have lost what you have already been grandfathered into. Now, if you want to add additional insurance with a new company, by all means, but don't just up and cancel something that you are already in, because it is to your detriment.
Yep.
Thank you, Ashley. Thank you, JP. Lolo, your question.
I'm jumping out the plane. I'm jumping out. No, I'm just playing.
Lolo, you had a question?
Yes. It was in regards to, you kind of hit it already though, the age. When you get to a certain age, especially in term, and then your premiums go up. You may not notice it at first, but they go up, and it's almost, I call it age discrimination. When it happened to me, I was shocked. Like, what? When did I get older? But they do go up, and I was asking, I think it was about changing, going to whole life. But you kind of hit on it already, and I think I also do have both, because I used to, be licensed as well. But it is kind of a shock, and everyone doesn't know that.
Correct.
So maybe you want to touch on it.
Yeah. So again, it's the age. The older we get, the more it costs to insure, right? And so again, whole life is going to give you that fixed face value at a fixed premium for the rest of your life. So no future surprises. Term life, again, increases incrementally. Typically, those increments are 10, 15, 20, or 30 years, but there are some companies where the incremental increases are much um, smaller. It could be every 3 years or every 5 years. Or if you were in a 20-year term policy and now you're in year 21, the premium could actually increase every year. When you uh, enroll in insurance and you get that thick packet, you need to look at the
Read it.
packet, and there's going to be a policy schedule. So they will actually tell you what that policy looks like every year of the life of that policy. So you can look to see, what is my face value going to be? What is my cash value going to be if it does have a cash value pot? And what is the premium going to be? Another important note about that, state law gives you what is called a 30-day free look window. So when you enroll in insurance, you have 30 days to review that paperwork and decide if this is something you actually want to be in. And you can cancel it without any penalty, without losing any money. You get all your money back.
Yep.
But there are some policies where you get to a certain point in them where you might have to feed more money in them to keep them funded. I say to keep them afloat and not end up upside down.
Right.
Yep.
Thank you.
Read it. Read your policies. Read your policies.
Have to.
Read your policies. I read this policy. I just put some additional coverage, I guess you could say, on Sasha or for Sasha. And I read when it actually matured, and I was like, ooh, I'm not even going to be here. For real. For real, I'm not going to be here. But it's the peace of mind for me right now to know that she'll be good, even as an adult. And to the point of generational wealth, even if she doesn't benefit from it personally, I don't know. I pray that she, makes me a grandfather one day, no time soon. I got plenty of time. But the grandkids will be able to benefit. Her children will be able to benefit from what started with her dad moving forward. That's my thought process.
There you go. Doughboy, you up.
One last.
All right,
go ahead.
Let's do Doughboy's question real quick here. It says, he says, how can you draw money from your policy? And what type do you need?
So whole life is the most obvious traditional policy with a cash value pot, right? And that cash value is going to accumulate, usually starting in the second year of that policy, and it's going to be at a fixed rate. Usually it depends on the company, anywhere between 2% and 4%, something like that. And that percentage is based off of your monthly premium, right? So the higher your monthly premium, the faster your cash value pot will increase. If you have a lower monthly premium, say for instance for a juvenile, the cash value is going to build, but it's slow, right? And if you have one of those policies, it's best to reach out to your rep or to the company that you have it with to find out the rules about pulling out the money. And I always tell people to be very careful when you are pulling out money because it does affect the policy. Unfortunately, a lot of insurance reps will position it as if it's a piggy bank that you could just go tip over and dump money out of without consequence, and it does not work like that, right? There are different options. There's a loan, which means exactly that. You are supposed to pay it back. There's a withdrawal, and then there is a surrender. A withdrawal is like pulling money out. A surrender is you completely surrendering your policy in exchange for the cash value built into it. You need to understand which one you're doing, which one you want to do, and what the expectations are, and how that transaction is going to affect the face value of your policy. And then another really universal life policies, universal IULs, index universal life policies are really, really popular product right now. That you're going to have a death benefit along with the cash value. Those are products that you can actually design. So you can design the input to get the output that you want. You can say, I want a $100,000 death benefit, and I want to have a $500,000 cash value pot by the time I'm 65, right? And it will tell you how much money you need to feed into that policy every month to achieve that $500,000 cash value pot by the age of 65. And then you could pull that money down out of that monthly or however you want. And then when you pass away, the $100,000 death benefit will pay out. And depending on how you set it up, you need to set it up so that the cash value will also, whatever is left in that pot will pay out on top of the death benefit, because sometimes it can be set up where the cash value pot doesn't pay out if there is anything left. So it's best to schedule a one-on-one with a person who is very knowledgeable. If you're looking at an IUL, you want to work with somebody who is good at designing them. But IULs are great because they're flexible, and they also have a floor, which means that your money, your investment in won't bottom out of it. If the market is performing poorly, it just might not accumulate as much money as you would like it to, but you won't lose your bottom line.
And one more question from Doughboy. Can't you make your trust the beneficiary?
You can. Yeah, you absolutely can make your trust the beneficiary, because then within your trust would have specific directives on how that money is issued out, etc. But you don't want to die without a named beneficiary, right? A trust has an executor or a person who administers that trust.
There we go.
And over the years, you also previous said you want to make sure you update that trust.
Right.
You want to make sure you update.
Yeah. Your beneficiaries. If say for instance you had your mother as a primary beneficiary and your mother passed away, a lot of us forget you need to update that.
Facts. I know this has been one of those conversations where it's like we're still going, but this is one of those conversations that we have to have, you guys. We need this in our lives as adults. We need to prepare our children for the worst case scenario. It definitely gave me some things to think about with my own child, to talk about, setting them up for success well in advance. Wish I would have done this when she was hours old versus years old, but sometimes you have to do what you can do with what you got. But with that being the case, I just want to say thank you to Ashley. I want to say thank you to Talina. I want to say thank you to Michelle, that's not Michelle, but Michelle. Peggy, I see you. The Drew Crew is in the building. For all you knowledgeable souls out here with this insurance knowledge, there are a lot of questions that can be answered. Ladies and gentlemen, boys and girls of Gentlemen After Dark, and I mean the audience, if you know that you are in need of some insurance, there are plenty of people out here that can help guide you to do what's best for you. But to have no insurance whatsoever, that's a no-no at this point. Like was said, we spend money on everything from cruises to shoes to weddings. We spend more money on weddings than a little bit. The least that we could do is prepare ourselves properly for departure from this here earth, or from this living world, if you will, and not leave our families, our kids, our spouses, family members with the debt that we could take care of ourselves at this point.
Mhm.
So, actually, any final words? I'm gonna post up your phone number here if anybody wants to get in touch with you and ask you questions. Maybe you can provide a service for. You guys know Talina. You can always reach out to her as well. She is currently in the field as well. Michelle Lawrence, that was her name, Michelle Lawrence. On this here page, if she wants to put, Michelle, you want to put your contact information, you don't have to, no pressure, but if you want to, feel free, leave your number where people can reach out and call and ask some of these questions, because some of us are just, for the lack of a better word, not so smart. We don't know. We're not educated on this stuff, and we're not trying to be educated, but tonight we're about education.
The last thing I would add is that Aflac came up several times, and we focused on life insurance, but check with a lot of you work with companies that offer supplemental benefits that will pay for things, cover you for things like cancer, heart attacks, strokes, hospitalization, accident-specific injuries. Those are great coverages to have, because life happens, and it happens like that. In November, I actually had 3 clients who had strokes. Then in December, I had 3 who were hospitalized with respiratory viruses, right? Fortunately, it's great to be able to tell people, hey, you can kind of relax. There's a $20,000, $30,000, $40,000, $50,000 check in the mail for you, and you take care of yourself. So if you do have supplemental benefits available to you through your job, find out, get the information on them, enroll, and usually a lot of companies have multiple carriers available, so you can kind of pick and choose what works best for you. I always say for me, the measure of a good company is, do they pay their claims, right? That's going to be how you measure a good company. And we were talking about reading the policy documents. Another important section to read are the exclusions and limitations, because usually when people have unhappy experiences with insurance companies, it's not because this was necessarily a bad insurance company. It's because they ran into a situation where that thing was not covered under what they have. And then also in terms of life insurance too, if it sounds too good to be true, it is too good to be true. They're accidental death policies. Like, these are very common because accidents are a common cause of death, and they are great policies to have because you get a whole lot of money for a little bit, like very cheap. But they only pay out if you die from an accident. If you die due to sickness or natural causes, that policy is not going to pay out. And unfortunately, a lot of people die with accidental policies thinking that they were true life policies. They are not, right? You can never go wrong having an accidental policy, but you want to have life insurance that will pay out for any reason.
Tish, thank you. I appreciate you. Final thoughts, you guys? Anybody? Final thoughts? I know this was heavy. Okay.
Yeah, get you some health insurance too.
Yeah. That too. Oh yeah. If you got a job, yeah, you better be trying to subscribe to everything. Everything.
And use it. Don't just pay it and don't use it.
That part.
Right.
I'll say this like this, and I'm gonna keep Ashley's number up. Life is short, you guys. We've said this so many times before. Life is growing critically short. It really don't even matter how young or how old you are. The possibilities of the uncertainties are real. You don't have to have a whole $1 million policy, but you need to have something for your families. Take advantage of the information that you have been provided tonight, because some of you out here in the neighborhood don't have insurance, some form of insurance. We don't want to do fish fries to bury you. We don't want to do what's that?
GoFundMe.
GoFundMe. Yeah. We don't want to do GoFundMes. We don't want to.
Or wash cars.
Well, maybe I'll get a car wash. No, I'm just playing.
No,
We don't want to do any of
no.
that, guys. We don't want to.
On the motorcycle.
And mind you, if you're family's in that situation, remember where you are. You are sitting in a refrigerator somewhere while your family is unable to grieve because they are hustling, trying to get money to put you in the ground.
That part. With that being the case, you guys, insurance is important. That's life insurance, medical insurance, dental insurance. Get your eyes checked too. I need to go get mine because ooh-wee. But you too. But it's all here for us. If you can spend $15 a day on lunch, $12 a day on Starbucks and a snack or whatever, going to get you that insurance. And don't just have some insurance, but also don't forget to educate. You too, get some insurance for the doggy. Don't forget to educate your kids about what you do or whoever your beneficiaries are. Educate them on what you have available for them. Is that Lola?
That's Lola.
Okay.
Oh,
Hi, Lola.
I was like,
no, not Ilona. Lola. Hi, Lola. Anywho,
my sister was coming through the door.
Right. That's going to be our time. Ashley, I do appreciate you.
Thank you, Ashley. Great
here.
job.
Thank you.
Thank you guys for having me.
Yes. You guys don't forget, I left her number up here. Reach out to her. If you have insurance needs and or questions, please reach out. I am a client of hers. She handles business quite well, and I do appreciate her. Hell, she can help me get some money too. So shoot-a-doo, let's go.
Yes, and make sure you link with the rep who is not there to just sign you up and collect a commission. Somebody who gives a service and supports you.
Right.
And who, when you call, they answer the phone. When you text, you can get a hold of them.
Yes.
Because that's the most important. That's the most important part. Because a lot of insurance professionals get your money and they disappear.
Right.
Never see them, never hear from them. They don't. It's the worst.
Stop running from them, y'all. When they come in, sit down. Go on and sign your name on the dotted line and get your insurances set. From the desert to the sea and to all the cities in between, we're going to bid y'all a good night.
All right. Good night. Thank you, guys.